Welcome to the deep dive. You're here because you're thinking smart about your future, and today we're looking at something pretty interesting. Gold.
Specifically gold in your retirement planning.
Right, exactly. How it can potentially, you know, build and protect that nest egg. We're really digging into the idea of tax-deferred growth within a gold IRA. We're basing this on Doug Young's article.
Yeah, it's a key feature. Tax-deferred growth
hmm
basically means your gains aren't taxed year after year.
Like they get to grow without the tax man taking a slice immediately.
Precisely. The tax comes later when you withdraw in retirement. So our mission today really is to unpack how that works, the benefits, the mechanics, and, well, what you need to consider.
Okay, let's start with the basics then. What is a gold IRA? How's it different from my regular IRA?
Good question. Fundamentally, it's a type of self-directed IRA. That just means you have more control over what you invest in.
More control how?
Well, instead of just stocks, bonds, mutual funds like in a typical IRA, a gold IRA lets you hold physical precious metals. We're talking actual gold, silver, platinum, palladium.
Ah, okay. So tangible assets, not just numbers on a screen.
Exactly. It brings something physical into your retirement plan.
Got it. Now let's hammer down this tax-deferred growth. Why is that such a big deal, especially with gold?
Well, think about compounding. When your gold investment potentially gains value inside the IRA, those profits aren't hit with taxes each year.
So that money stays in the pot.
Right. It stays invested, working for you, potentially generating more growth. It avoids that sort of annual drag from taxes. Doug Young used this analogy, like planting a tree and just letting it grow without constant trimming.
Letting it reach its full potential, kind of?
Sort of, yeah. Over the long term, that lack of annual taxation can make a pretty significant difference to the final amount.
Makes sense. But okay, beyond the tax angle, why gold specifically? Why put metal in my retirement account?
Well, historically speaking, gold has some interesting qualities for long-term security. I mean, for ages, it's been seen as a store of value, right?
Yeah, a symbol of wealth.
And it often holds its ground or even goes up when the economy gets shaky. Plus, it adds diversification.
How so?
It doesn't always move in the same direction as the stock market. So it can act as a bit of a counterweight, potentially smoothing out the bumps in your overall portfolio. And let's not forget inflation.
Ah, the inflation hedge argument.
Yes, gold has historically tended to rise, or at least hold its value, as the cost of living goes up.
Okay, so it's really about adding maybe a layer of stability
Yeah.
and diversification, less correlation with stocks.
Precisely. Think of your retirement savings like a pie. A gold IRA adds a different kind of slice, potentially a more resilient one,
A robust slice.
you could say that. And like Doug Young emphasizes, the earlier you start, the more time that tax-deferred growth has to really work its magic.
Okay, let's dig into those tax advantages more. You mentioned a tax-protected bubble. What does that actually look like for the investor?
Yeah, that bubble idea is helpful. Basically, any increase in the value of your gold within the IRA, it's shielded. You don't report it on your tax return that year. No capital gains tax annually.
So the growth just accumulates inside.
It stays inside that bubble, compounding potentially until you take withdrawals in retirement. Here's another potential plus. Many people find themselves in a lower tax bracket when they retire compared to their peak earning years.
Oh, right. So you might pay less tax on the gains eventually than you would have along the way.
That's the potential benefit, yes. You defer the tax, and you might end up paying it at a lower rate later on.
Can you maybe walk us through a simple example? Numbers always help.
Sure, let's try one. Say you put $5,000 into gold in your gold IRA,
Okay.
and over, let's say, 20 years, the value of that gold grows to $15,000. It's a $10,000 gain.
Right.
Because it was inside the tax-deferred gold IRA, you paid zero tax on that $10,000 gain during those 20 years.
Wow, okay.
The tax only becomes due when you actually withdraw that money in retirement, and like we said, maybe at a lower rate then.
Gotcha. So it seems like maybe a slower, steadier path compared to, say, chasing high-growth stocks.
Yeah.
How does it stack up against a traditional 401k or IRA overall?
That's a fair comparison. You could almost use the old tortoise and hare story. Traditional accounts, heavy on stocks, might offer faster growth potential. The hare, maybe.
But more volatile.
Exactly. Higher highs, potentially lower lows. A gold IRA, with its focus on precious metals, is generally aiming for more stability, maybe slower growth sometimes, but steadier, more like the
Yeah.
tortoise perhaps, especially when things get economically uncertain.
Okay, so tortoise versus hare. What are the key differences then, side by side?
Let's break it down. First, asset types. Physical metals versus financial instruments like stocks and bonds. That's a big one.
Right.
Second, tax benefits. Both offer tax-deferred growth, so that's actually a similarity in this context.
Okay.
Third, market dependence. Gold often moves independently of the stock market. It has different drivers.
Less correlation.
Less direct correlation, yeah. And fourth, inflation hedge. Gold historically has been seen as a strong hedge against losing purchasing power due to inflation, maybe more directly than some other asset classes.
Interesting. Now, thinking about someone nearing retirement, their priorities shift, right? Less about hitting home runs, more about protecting the lead.
Absolutely. As you get closer to needing that money, preserving the capital you've built becomes, well, paramount.
So how does gold fit there?
Well, gold's historical performance during economic stress, think recessions, high inflation makes it attractive for stability. It's about having a part of your savings that might hold up better if the broader market takes a hit, a sort of financial cushion.
Right, a safety net. So it's a strategic play as you de-risk your portfolio.
You definitely see it that way. It's about looking at your whole portfolio. Are you too exposed to stock market swings, for example? Maybe adding gold via an IRA helps diversify, helps reduce that overall risk. You know, the old, don't put all your eggs in one basket advice.
Always good advice. Okay, before someone jumps in, what are the absolute must-knows, the prerequisites?
Okay, few key things. First, eligibility. You need to be eligible to open a self-directed IRA, and you need to be aware of the IRS contribution limits for the year.
Same limits as other IRAs.
Generally, yes. Second, your goals. Does investing in gold actually align with your long-term retirement plan? It's not for everyone.
Makes sense.
And third, risk tolerance. Yes, gold is seen as stable long-term, but its price can fluctuate in the short term. You need to be comfortable with that possibility.
Okay. And you mentioned earlier you can't just buy gold bars and stash them under the mattress for your IRA. You need a custodian. What's that about?
Ah, yes, the custodian. Critically important. They are IRS-approved financial institutions, often trust companies or banks, that handle the administration of your gold IRA.
What do they actually do?
They facilitate the purchase of the IRS-approved metals, arrange for storage in a secure, approved depository, not your home, and handle all the reporting and record-keeping required by the IRS.
So choosing the right one is pretty vital.
Absolutely vital. Look for one with specific experience in precious metals IRAs. Be really clear on their fees, setup fees, storage fees, transaction costs, any potential hidden fees. Do your homework, read reviews, maybe ask for recommendations. Transparency is key.
Got it. And thinking about that tax-deferred growth, is there an ideal time frame? How long does it need?
Well, the longer the better, really. Tax deferral shines over the long haul because of compounding. The longer your gold sits in that tax-protected environment, growing without annual tax hits, the more significant the potential benefit becomes.
So starting early helps maximize it.
Definitely. If it fits your plan, starting sooner rather than later gives that compounding effect more time to work before you hit retirement.
Okay, fast forward. You're retired, age 59 and a half or older. How do you actually get your hands on the value or the gold itself?
Good question. Once you hit that eligible age, typically 59 and a half, you can start taking distributions without penalty. You usually have options.
Like what?
You might be able to take physical possession of the actual gold coins or bars. Though you need to think about the logistics and potential tax reporting for that. It can be complex.
Okay, what's the alternative?
The more common route is to instruct your custodian to sell the gold held within your IRA. They sell it, and you receive the proceeds as cash distribution.
And that cash is taxed.
Yes, that cash withdrawal is then taxed as ordinary income for that year, which goes back to that earlier point. Planning your withdrawals based on your expected retirement income and tax bracket is really important.
Right, strategizing to minimize the tax hit.
Okay.
For someone listening who's thinking, this sounds interesting, what practical steps or tools should they consider?
Okay, three main things, I'd say. One, stay informed, keep an eye on gold market trends, understand what influences the price. You don't need to be an expert trader, but be aware.
Where can people do that reliably?
There are plenty of reputable financial news sites, Bloomberg, Reuters, Wall Street Journal, also specific precious metals news outlets. Some newsletters can be good, just be critical of the source. Maybe even some well-vetted investor forums, but proceed with caution there.
Okay, stay informed. What's number 2?
Balance your portfolio. And crucially, talk to a qualified financial advisor. A gold IRA shouldn't exist in isolation. It needs to fit into your overall financial picture, your risk tolerance, your goals.
Personalized advice is key.
Cannot stress that enough. An advisor can help you figure out if it's right for you and how much might be appropriate.
And number 3?
Understand the rules. Know the IRS regulations about contribution limits, eligible metals, storage requirements. Getting this wrong can lead to penalties or taxes you didn't expect.
Right. Okay, let's hit some frequently asked questions. Big one. Can I move money from my existing 401k or IRA into a gold IRA?
Yes, absolutely. That's actually how many people fund them. It's called a rollover or a transfer.
Is it complicated?
It doesn't have to be if you work with a good custodian who specializes in this. They'll guide you through the process to make sure it's done correctly, according to IRS rules, so you don't trigger taxes or penalties accidentally.
Okay. And the specific IRS rules you mentioned, purity and storage, can you recap those?
Sure. For gold, the IRS generally requires a minimum purity of 99.5%. So not all gold coins or bars qualify. And critically, the metal must be held by the custodian in an IRS-approved depository or vault. Not at home, not in a safe deposit box under your name.
No basement safes.
Definitely no basement safes for IRA gold. And remember those annual contribution limits they apply, just like with traditional Roth IRAs.
Got it. We also talked about inflation. Can you maybe spell out, again, how the tax deferral makes gold potentially more effective as an inflation hedge within an IRA?
Yeah, think of it this way. Inflation eats away at the value of your money over time. If gold's value rises to keep pace with or even beat inflation, that's good, right? Now, if those gains were taxed every year, inflation would still be eroding the after-tax value. But inside the tax-deferred IRA, the entire game stays invested and keeps working, potentially staying ahead of inflation more effectively until you withdraw it. The tax deferral protects the inflation hedging gains along the way.
So the growth isn't being chipped away annually by taxes while inflation is also chipping away.
Exactly. It gives the hedge more room to work, you could say.
And during those scary economic downturns, market crashes, is gold really a safe haven?
Historically, it has often acted that way. Safe haven is maybe a strong term. No investment is perfectly safe. But gold's price often behaves differently from stocks and bonds during crises.
It doesn't always fall when they fall.
Right. Sometimes it even rises when other assets are falling, as investors seek perceived safety. So that lack of direct correlation can add a layer of stability or act as a buffer for your overall retirement portfolio when markets are turbulent.
A bit of ballast in the storm.
A good analogy, yeah.
Okay, last FAQ perhaps. When you actually hit retirement age, let's say 65, and you want to start using the money, recap the process again, taking distributions.
Okay, so you're 65, you've passed the 59.5 threshold,
Yeah.
you contact your custodian, you decide how you want the distribution. Option 1, physical gold. They arrange delivery, you handle storage and potential reporting, more complex.
Option 2.
Option 2, sell the gold. You tell the custodian, sell X amount of my gold. They execute the sale within the IRA. The cash proceeds are then sent to your bank account as a distribution.
And that cash is what gets taxed.
Correct. That cash withdrawal counts as taxable income in the year you receive it, at your ordinary income tax rate for that year. So again, planning withdrawals is key. You might take smaller amounts over several years, for example, depending on your tax situation.
Makes sense. Okay, so wrapping things up, it really does sound like a gold IRA offers, well, a pretty distinct path for retirement savings.
It really does. That combination of potential tax-deferred growth with an asset like gold, which has those unique characteristics, stability, inflation hedge potential, it's a specific kind of opportunity.
But definitely not something to just jump into lightly. Understanding the details, the rules, how it fits your life seems critical.
Couldn't agree more. You absolutely have to look at your own financial situation, your long-term goals, what level of risk you're comfortable with. It's not a universal fit.
And that brings us back to getting advice.
Yes. Always talk to a qualified financial advisor. They can give you that personalized perspective you need to decide if this makes sense as part of your retirement strategy.
Okay, so here's something to think about. In today's, let's face it, pretty complex and uncertain economic world, how might adding a tangible asset like gold, one that grows tax-deferred, actually change how you think about your long-term financial security? Could it add that extra layer of resilience you're looking for? Definitely food for thought. Thanks for joining us on this deep dive.